President Biden's new mortgage plan, which goes into effect today, has been met with criticism from financial officers in 27 states. The plan, outlined by the Federal Housing Agency, FHFA, just a few weeks ago, is designed to help lower-income borrowers afford their monthly mortgage payments. It does so by forcing people with good credit scores to pay more each month for their mortgages, with extra payments being credited to the loans of higher-risk borrowers. The policy has been attacked by both Republicans and Democrats, including President Obama's former federal housing administrator. It is seen as a middle-class tax hike that will unfairly cost American families millions upon millions of dollars. The state finance officers argue that the policy will turn the normal system of home buying incentives upside down by hurting people who make sound financial decisions. It will take money away from those who played by the rules and did things right, including millions of hardworking, middle-class Americans who built a good credit score and saved enough to make a strong down payment. Those who make down payments of 20% or more on their homes will pay the highest fees, which the finance officers describe as one of the most backward incentives imaginable. The forced extra payments will be used to hand out better mortgage rates to people with lower credit ratings. Critics say the plan will make it easier for people with shaky credit histories to afford more expensive mortgages, putting them at greater financial risk. Subscribe for more content like this. While expanding homeownership is a worthy goal, the forced subsidization of risky loans is not the way to do it, say the state officials. They argue that the right way to solve the problem is not to use the power of the federal government to penalize hardworking, middle-class American families by confiscating their money and using it as a handout. Instead, they suggest implementing policies that will reduce inflation, cut energy costs, and bring lower interest rates. They believe that these measures will ultimately help more Americans achieve their dream of homeownership, without hurting those who have worked hard to build a solid financial foundation. The FHFA defends the policy, saying it is necessary to address the racial wealth gap and expand access to credit. However, critics argue that it will have the opposite effect, by making it more difficult for middle-class Americans to achieve homeownership and exacerbating existing inequalities. In conclusion, President Biden's new mortgage plan has been met with strong opposition from financial officers in 27 states, who believe that it amounts to a middle-class tax hike that will hurt hardworking Americans. While the FHFA argues that the policy is necessary to address inequalities, critics argue that it will have the opposite effect and make it more difficult for middle-class Americans to achieve homeownership. The debate highlights the complex challenges of addressing inequality and expanding access to credit in a fair and sustainable way. Thanks for watching. Subscribe to our channel for authenticity.